Welcome to the latest in our series of Meet the Lender. And today I was really lucky to be joined by Stella Brookman, who is our account manager at Fleet Mortgages. Now, for those of you who have not come across Fleet Mortgages before, and there will be quite a few of you because they're a relatively new lender. I say new, they've been around for about 5 years or so. I put them in the camp of a specialist lender. So these guys are great at limited companies, small HMOs, small multi-unit blocks as well. They're now owned by Starling Bank. They weren't when they initially came to the market, but they've subsequently been purchased. So one of the things that's really great about Fleet is that they have access to some more competitive funding lines than those lenders who are reliant exclusively on the capital markets. So what this means is that Fleet are able to bring to the table is a relatively specialist proposition, but with not quite clearing bank type rates, but getting down that way. So it's a really nice offering that they have, and we really enjoy working with them. We have, as a business, a really good relationship both with the senior management, but also we have underwriters that come and sit in our office as well. And if anything is going to be proof in the pudding, one of my mortgages, my limited company mortgages, is also with Fleet. So there you go. If you need any kind of reason to know that they're decent, I hope that's a good point of reference for you. So let's see what Stella had to say about Fleet. Stella, thank you so much for joining me today. Really appreciate you jumping in the hot seat for a few questions where we can find out more about Fleet Mortgages. So the first question today for you is going to be, who would you say is a typical borrower for Fleet?
Right, good question. Our typical borrower, probably about 75 to 80% of our business are limited company portfolio landlords.
Yeah.
I mean, I think the way the market has changed over the last couple of years, this is a growing area. I think a lot of people are changing. I think individual landlords have decided had enough coming out, and the portfolio landlords are grabbing those properties. And they're in it for the long haul. So basically, they are our typical client now, and that's what we're basing most of our criteria on. Don't get me wrong, there's loads of personal landlords out there. They still require Fleet services and other buy-to-let lenders. But yeah, I can definitely see the market growing into portfolio.
Brilliant. Okay, thank you. And question number 2 for you is, what would you say are the 3 top USPs that you have there at Fleet?
Okay, top 3. My top 3 might not be everybody's top 3. We've got a load of USPs, and as a growing buy-to-let lender with Starling as being our funder and owner, there's going to be certainly more to come. But my 3 top ones are shared accommodation. So basically, we offer HMOs up to 6 bedrooms, which require a licence in place, and the landlord needs to have a minimum of 12 months rental experience that can be a 1-bedroom flat. But with shared accommodation, I think it's quite a niche area for us. I know other lenders do it, but there are certain things that we do better. We allow a property that's only got 4 bedrooms, and the valuer has to confirm there can't be more than 4 bedrooms. Doesn't require an HMO licence by the local authority, has a separate communal and separate kitchen, and we can then place it on our standard products, which means they get a cheaper rate. They get a free valuation up to 500,000, and a first-time landlord can do it as well. So we can have 4 separate tenants with 4 separate ASTs, and they can have locks on the doors. A lot of other lenders require just 1 AST. So that's my first top USP. Second, we offer free valuations up to 500,000 on all our standard products. That's a really good one. Every little counts, trying to get the money as much as you can. And the other one is we do corporate tenancy agreements, and we changed our policy a little bit. So we used to have to view them and get them agreed by legal. Now I have a specific email that I can send to the brokers, and it's just a little bit of a tick list. But the rule of thumb is no more than a 5-year term for a corporate tenancy agreement. And that is whether letting through the local authority or a housing association. We do a lot with Serco. There has to be a break clause for a minimum of 12 months for both the tenant and the landlord. No care involved. So if you wanted to discuss it up front with me and Hannah, my internal BDM, more than happy to do that for you.
I'm so glad you've picked those out, because those are actually 3 really key things. Definitely the sharers on single ASTs, individual ASTs, but not being an HMO product. That's definitely something we use you guys a lot for. And yeah, absolutely, the tenancies as well is another one that we think you guys are really fantastic at. So I agree with your USPs, Stella. Next question for you is going to be, what would you say is like the most common reason that Fleet have to decline applications?
Generally, it doesn't fit policy. We can do exceptions on policy, and I always encourage brokers to discuss maybe a little bit more complicated application up front, just to see if it fits. But that's generally the reasons why they're declined. It's just not fitting our policy. Most common one is probably credit score. You know, we are relatively a clean lender. There are a few quirky things we do. I won't go into big detail now, but there are quirky things we can do. But yeah, I'd say that's probably the one reason that's declined.
So in terms of applying to Fleet, so you guys have got loads of great stuff in your lending policy. Your rates are really good in your space, for sure. There's no escaping that fact. We know that actually we need to check lending policy. But in terms of making a smooth application to Fleet, what can people do in readiness to make an application to you guys to make sure it goes through as quickly and easily as possible?
Well, I think the main one is obviously, I mean, they're talking to their brokers anyway to make sure the route they're going down, the lender they're choosing is the right one for them. Also, when we do the shopping list, we send the shopping list out on day one. Those documents are sent back in a good time scale. So the quicker we get them, the quicker we can work them. Maybe better, and this is probably a little prompt for the broker, to actually get the documents all back in one hit so they can all be viewed at the same time. We go to valuation on day one as well. So obviously that's going to speed up the process because we look at hopefully a 5 or 6 day turnaround. So again, for the applicant, make sure that the valuer can get in contact with somebody to do that valuation. The amount of times the tenant's away on holiday or the estate agent hasn't been informed, you know. So as long as they've got all their ducks in place, the process should be pretty speedy and smooth for them. So yeah, that's 2 things I think would be the main areas.
That's really good advice, actually, because when we're having these conversations with other lenders doing other episodes, it's all about making sure you've got all the right paperwork, which is, of course, really, really important. But actually, you're right, making sure the tenant can actually, or the estate agent, they can actually accommodate the valuation appointment is a fairly key one, isn't it? So,
it is, and then there's an adage to that as well. When the valuer is actually inside the property, make sure they've got access to all spaces, because make sure the loft hatch isn't shut, make sure the garage isn't locked, because ultimately that will then incur an re-inspection with another fee. So just make sure everything's available to the valuer.
We actually had one the other day. Dory wasn't with you guys, and the valuer wouldn't value the property because they looked around it and they couldn't get one of the bathrooms because the tenant was in it.
I remember that one. It was one of ours.
It was you. Yeah. But it proves, isn't it, that actually making sure that the tenants, if they're going to be there, are briefed, that they need to allow access to the whole building, not just the communal areas or whatever it might be. That's really good advice. Thank you. So look, moving away from kind of your sort of day-to-day lending, as it were, and turning your thoughts more to the future now. We've obviously got the Renters' Rights Bill coming into law in the autumn. And I think one of the things that people are asking us a lot is how the new rules that come into play might impact the way that lenders choose to underwrite mortgages. So, and I can appreciate you haven't got you can't talk forever in the future, but as it goes at the moment, are Fleet planning on making any changes to the lending policy in response to the Renters' Rights Bill?
Not that I'm aware of, and this Renters' Right Bill has been around for some time. It's been promising to come in. I think landlords are fully aware of the changes that are perhaps going to be applied. What we have done, which I think will help landlords going forward, is on our website, under literature, under useful guidelines, there is a piece all about the Renters' Right Bill. Ooh. So it's getting those landlords ready to understand it fully and the impacts it's going to have on the landlord. To be quite honest, I've read it. I don't think it's going to have massive impacts. It's just understanding there's not going to be a Section 21 in place anymore. It's going to be a Section 8, so they've got to have a good reason to be able to want to get the tenant out. So subtle changes, I think. But that's all on our website. So it's really, really good information for them to read. But no, I don't think it's going to have a massive impact on the way we underwrite business going forward.
Brilliant. That's good. And actually, that seems to be the stance across the industry as a rule. So that's really encouraging. That's one thing that the Renters' Rights Bill isn't going to hopefully have too much impact on. And lastly, really just to wrap up, I'd really love to hear your thoughts on where you see the future of the private rental sector.
It's always going to be there, Jenny. Always. The government have not got enough money. They're not building enough houses. They rely on the private rental sector. It's just so imperative for them to make it a bit easier for landlords to be able to buy those properties.
I was going to say, they've got a funny way of showing it sometimes, haven't they?
Yeah, of course they have. So no, I think it's always going to be there. I know people run a little bit scared, but like I say, I think the market is changing. It's going to become more of a limited company portfolio landlord market. And for those portfolio landlords, majority of them will run it like a business. So it's for the long haul, not the short term. So, they're going to make their returns on the yields quite good. A lot of them do it for pension requirements. So no, I have complete faith in the private rental sector, and I believe it's there, and it'll always be there.
That feels like a really good note to end it on, on a positive.
Yeah, absolutely.
Thank you.
Things are roundabouts. We're going to go up and down, but that's just the way the market is. We don't have a crystal ball, so we don't know what's going to happen.
Yeah, and I think actually, just kind of as a side note, when you've been in the industry for a long time, which I have, you're right, it is all cyclical. There's always a period of time where things are kind of actually really quite nice, and then there's times where they're less comfortable and there's changes that come in. But in my experience, landlords as a kind of community, they're like the most resilient bunch of people, and they might not like the changes, and they will of course be at times quite vocal about not liking the changes, but they do adapt and find ways to run a really successful business going forward. So I think you're absolutely right. Buy-to-let is definitely here to stay.
Yeah, absolutely. It's a good market.
Thank you, Stella.
You're very welcome, and it's been a pleasure. Thank you very much, Jenny.
So there you go. That was another Meet the Lender here with MFB, and I hope you found that really useful. We're going to continue recording these and rolling them out to you. If there are any lenders that you'd like us to have a chat with, please just let us know. You can drop a note in the comments, and if there are any questions you'd like us to kind of add to our repertoire of questions, again, very happy to do so. Just let us know. And finally, just to say that if you have any questions about anything you've heard today, or mortgages obviously more generally as well, do feel free to get in touch. We'd love to hear from you. 0345 345 6788. Thank you so much for watching, and we'll see you again next time.